This is Financially Fit Business with Ruth King.
Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here's how we will help you increase the financial fitness of the businesses today. Do your clients ever complain about their taxes being too high? I'll bet most of them do. My guest today, Alex Sentell, okay, we're going to start this again. It's CEPA, right?
CEPA, yeah, that's
Yeah, because
okay.
I'm so used to CPA. I just screwed that up.
I'm
All
so
right.
happy we're able to start again. That's not because you didn't do bad, but because I was nervous. Now I'm good. We started and let's run it again.
Yeah, we're going to start it again because I screwed up.
Oh, you're good. You're good. I know it's if I say it fast, people may think I'm a CPA.
Yeah. So anyway, all right, here we go again. Take two. Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here's how we will help you increase the financial fitnesses of your businesses today. Do your clients ever complain about their taxes being too high? I'll bet that most of them do. My guest today, Alex Sentell, CEPA, Managing Director for One Atlanta TaxSolutions, gives you some ideas that might help your clients. Alex, welcome to Contractor Sense.
Hey, Ruth. Thanks for having me today. I'm happy to be here.
Oh, my pleasure. So in terms of full disclosure, Alex and his partner, Chris, presented at a meeting that I was, and I was really impressed about how they can help companies save on their taxes. And I wanted to bring it to you all as CPAs so that you might be able to talk to some of your clients who are complaining about their taxes being too high and asking you what they can do about it. So, Alex, before we begin, give an overview of One Atlanta TaxSolutions, please.
Yeah, absolutely. And just like you said on the lead in, how many clients do you have that would like to pay less in taxes? Nearly all of them. And so that's always a great conversation starter. It's easy to get into the conversation with people that way, but of course following through and actually, showing people how this works is the most important. So I'm happy to be here and talking to your listeners about this. But at One Atlanta Tax Solutions, we work primarily with high net worth, high income earning individuals. So for us, we qualify that as anyone making over 400,000. And so a lot of our clients do make much higher than that, but at the 400,000 level, that's usually where you start seeing a six-figure tax bill. And we just think in a lot of cases that's too much. There's something that we can do there. And, an important thing for your listeners, Ruth, I would say we do not, at One Atlanta Tax Solutions, we're not here to replace a client's accountant, their CPA. We're here to work alongside the CPA with more creative and advanced strategies. So the thing about us that I really, really like being managing director with One Atlanta Tax Solutions is that the founders have been doing this for 30 years. Okay. I'm a little younger. I haven't been doing it for 30 years, but it's really, really, it creates a lot of credibility and confidence for me in doing what I do, knowing that these structures, these strategies have decades of experience, knowledge, and credibility backing them. So that's really what we look for as a high net worth owner, someone with an accountant that their accountant wants to execute something a little more advanced for their client.
Very good. So before we started this podcast, we said we were going to talk about two of the most popular strategies, correct?
Absolutely.
All right. So let's talk about the first one.
Okay. So these are really, really fun to talk about. We have about 20 different strategies. So for the listeners, keep that in mind. These are two that I really like to present first to someone who fits in the category. Now, often we are examining whether a client has a certain income level, what state they're in, if they already have a ton of normal deductions or not. So we may do these two strategies or we may not, but Ruth, they are really fun to talk about. So the first one I want to bring up we call box house. Okay, it's a really simple term. And for your accountant listeners, they're going to know this is Section 179 bonus depreciation. Okay, but the whole idea of the structure is that you are, as the client, investing in a partnership with a tiny home. Okay, so for a tiny home, you may have seen these, Ruth, right? They're
Yeah,
really
they're little,
small,
itty
but
bitty. Yeah.
yeah, they're small, but they're really nice. They come with a washer, dryer, a kitchen, basically everything a person would need to live in temporarily. That's the big key word, temporarily. You know, a lot of our clients, especially the wives, may look at this and say, "Hey, I want to put one of these in the back next to the pool. Let's put one of these in the back for a pool house." But that's actually not the use case. The use case for this specific model of home that we are connecting our client with is for disaster relief housing. Okay. And so they're on government contracts from FEMA and state governments as well, even some local municipalities, and they are kept on the sidelines, Ruth. They're kept um, in these shipping containers, and they're patented to fit two inside every shipping container. They're foldable, they're redeployable, and you can actually deploy several hundred in a matter of one day. So the use case is, let's use Florida, for example, because everyone will understand that Florida is inevitably going to undergo an emergency situation. Usually in Florida, it's a hurricane. In
Yeah.
California, you have fires and earthquakes and things like that. But Florida has signed on for thousands of these units to keep them on the sidelines, what we call a ready pod lot. And they're on an ongoing cash flowing contract, even when they're stored inside the shipping container. But in Florida, when a hurricane comes through, inevitably, and wipes out hundreds of homes, instead of all of those people being rendered homeless for a stretch of time, and the data will show that if we solve that, so if we provide a solution for homelessness, disaster induced homelessness within 72 hours, you really are increasing the likelihood of an economic rebound for those people and for the area. But when these homes are damaged or destroyed, all of these tiny homes are taken off the Ready Pod lot, deployed to the area. Hundreds are set up in a day, and now those people have places to stay.
Cool. So this is kind of fun and kind of cool. So minimum investment in something like this?
Yeah, and I know your listeners are very astute, especially in this specific category. So they're going to go, well, what's the tax side of this? You know, what's the financial
Mhm.
side? That's the use case. And so I'd love to set up a meeting with any of them and show them all of our slide decks in the future. But it's essentially, um, let's use the numbers 500,000. So if someone has 500,000 income, their tax bill is usually around 150. Okay, so with a $100,000 investment into one of these tiny homes, which does not count as real estate, Ruth, that's the important distinction. This is considered a piece of equipment. If you think about it like that, like you're investing in a piece of equipment, therefore you can use 179 bonus depreciation, 100% year one, thanks to the beautiful bill. But 100,000 investment will actually reduce a client's AGI by 500,000. So therefore, if they have a $150,000 tax bill with a $100,000 investment in a tiny home, they save 50,000 year one. Okay, and then the other cool thing about this strategy is that these units cash flow. Okay, nothing mind blowing, but let's say the client makes an extra 20,000 in the first year from the rental contracts. That's a $70,000 swing, 50,000 on the tax savings up front, and then 20,000 on the first year cash flow. So that's a $70,000 swing for the client.
Got it. Okay. So before we take a break, if somebody's really interested in finding out more about this particular um, tiny homes, how do they do, or anything else that we talk about? Give everybody how to contact you.
Yeah, well, we really want to speak with you and find out exactly what your situation is or what your client's situation is. The best way would be to find me on LinkedIn at Alex Sentell, Sentell, or go to our website, One Atlanta TaxSolutions.com, and fill out a consultation form, and I'd be happy to speak with any of your listeners.
Great. And it's one is spelled out ONE, correct?
ONE, correct.
All right. We'll be right back. Thanks for listening to the Financially Fit Business Podcast.
Financial advisory services are the key to the longevity of the accounting profession. If you want to get started providing advisory services or want a review of a finance course you took in college, Ruth King's manual, Understanding Financial Trends Analysis, might be your first step. This manual gives you the information you need to help your clients with their financial statements. A great start or addition to your financial advisory practice. You help them with clarity on their business's financial health, the ability to spot impending issues and resolve them before they become a major crisis, less stress and sleepless nights worrying about the financial part of their business. Your Financial Statement Trends Analysis Manual is the reference guide. What do you want in your financial advisory services practice? Click on the link below for more information and to order.
We're back. Thanks for listening to the Financially Fit Business Podcast. I'm speaking with Alex Sentell, CEPA, who is the Managing Director for One Atlanta TaxSolutions. And before the break, we talked about tiny homes as, you know, one of the most fun ways to actually do this. And now we're going to talk about a second potential of the 20 or so that you do, correct?
Correct.
All right. So what are we going to talk about this time?
Yeah. So again, your accountants are going to be very, very educated. I do love when I can speak to people who already have a great understanding of the tax side because, as we know, not many entrepreneurs do, and that's fine because they're excellent at what they do. But your listeners are definitely going to understand charitable deduction, Ruth. So it's a really cool strategy because there's leverage involved in the client's investment. And when I say leverage, that word can be really fun to some people or really scary to others. But I'll tell you what I'm talking about. So if you go and you donate to a charity right now, if you give $1,000 to a charity, everyone knows you can deduct $1,000, from your income. It's not going to be taxable income anymore. But that's what we call a one-to-one. That's a normal one-to-one deduction. What if I could say you could donate 1,000 and you could reduce your taxable income by 5,000? Okay, so there's some leverage involved there where the client's dollar goes further. And this is where the savings are created through tax efficiencies. So your accountant listeners are definitely going to say, how do you do that? What's the leverage there? So imagine this. We already have a charity that is established. Its purpose is to receive a musculoskeletal pain management device. Okay, this charity is already designed to receive and distribute these devices to the people who need them, which in this case, being a musculoskeletal pain management device, the people who need these are high school and college athletes and also people in nursing homes. The typical solution when those folks have pain is that they are prescribed opioids, which are very damaging. They're also prescribed corticosteroids, not very good for the bones and joints, as well as blood sugar for older population, or even Tylenol and ibuprofen isn't the best solution. So that's the charitable aspect, is that we're purchasing a product by DNA Harmony. You can actually go find these products on Amazon right now. And it's a red light vibration therapy wrap. Okay, so it treats musculoskeletal pain in a holistic way and non-pharmaceutical. So that's the charitable aspect. Let's talk about the savings for the client in this case. So the way that it's structured is that with our partnership with DNA Harmony, the client is able to purchase wholesale. So they buy these products in bulk and they're able to buy, let's say, $100,000. Okay. When they donate them, and they count as fair market value. Okay. So if they're listed on Amazon for sale right now for $300, which they are, but we can say the client is going to purchase $100,000 worth of them at an 80% discount. So they're getting them per unit at about $60 per unit. So it's an 80% discount when they purchase them in bulk. But when they donate them, they get to deduct the full fair market value of $300 per unit. And that's how the 1-to-5 ratio is created. So in that sense, in that example, it's 1-to-5. Same thing with our tiny home. There's 1-to-5. So 100,000 investment will reduce their taxable income by 500. In this case, you can mitigate 500,000. I will say when we do a financial consultation, we get into these details. But charitable strategies are limited to 60% of AGI, Ruth. So that's where the financial consultation, the tax discovery consultation, we really get in depth and find out exactly what the client needs. So you can't just get rid of all of their income with this strategy. You can mitigate 60%, and then maybe you come on and do a box house on top of that for the other 40%, or use one of our other strategies. So we can actually stack multiple strategies in order to achieve the result for the client.
So typically, let's assume that we're interested in a CPA has a client who needs this. Do we have to do this in the tax year? Like if we want to take it off on 2026 taxes, do we have to do it by December 31st of 2026, or is there any leeway or anything like that?
Yeah, you're exactly right. Yeah, Ruth, you're exactly right. So, especially this time of year, we're recording this in early May. Taxes are top of mind for both clients and the accountants at this time. Hopefully, all of your accountants, your listeners, are really relaxing, recharging, and recovering at this point. But yes, for our strategies, exactly right, Ruth. It just needs to be executed in the tax year. We wouldn't recommend calling us in December. If you wanted to do something like this, we would want to start the conversation now if possible. Now, Ruth, sometimes, as you know, entrepreneurs, they've got a lot going on. They find us in November and we get on the horse and try to knock something out for them within the month so that they don't have a six-figure tax bill. But the best way to do it is to find us at this point of the year in May, June, July. Start the conversation. Let us start methodically figuring out exactly what the client needs, involve the CPA and any other trusted advisors in the process. And yes, as long as the strategy is executed within the tax year, the year of the income that we're trying to mitigate, then we're good.
Yeah. This is the time of year that everybody's complaining about how much they paid in taxes, and they paid it now. So there's nothing they can do about 2025 anymore.
Exactly.
But this would be a phenomenal conversation for you to have with your clients. Say, look, you were grumbling about paying that much in taxes. Would you like a conversation about some things we can do to mitigate that next year? And I can't imagine any client's going to say no. I just don't
That's
see that
exactly
happening.
right. That's always the yes. And
Yeah.
and then it's from there just explaining the structures, making sure the accountant can see the vision and understand the strategies and structures, which we take our time and communicate everything, like I said, with the accountant and the client themselves. So you're right. After paying a huge tax bill in April, our phone starts to blow up in May and June because people go, "I'm not doing that again this year."
Yeah. I can see that happening. So, Alex, give everybody the website and how to contact you again.
Yeah, so go to LinkedIn and follow me, connect with me, send me a message. My name is Alex Sentell, and that's Sentell. And then you can go to our website at One Atlanta taxsolutions.com, and you can fill out our consultation form, or you could just ring the number on Google. It's probably going to come to my phone, and I'll be happy to have a conversation.
Alex, thanks so much for being with us.
Thank you so much, Ruth. It was an absolute pleasure to speak with you again.
And thanks to all of you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a business owner improve the health of his company. For comments or questions, call me at 770-729-8000 or email rking@financiallyfit.business. Thanks for listening. Have a great and profitable day.